Hey, what's going on, guys? Welcome back to Kiwoom Learning, and this is Stock Picks. The stock we'll be going over today is ORCC Capital Corporation, ticker ORCC. And the reason why we're going over that today is because of the fact that U.S. inflation has been a lot higher than previous years, as well as the fact that their dividend is around 8.5 to 8.6%, which is a lot higher than just regular and large cap dividend companies. Now, ORCC, just looking at an overview at Seeking Alpha, which I use a lot for my personal stock picks, is that ORCC has been actively increasing its leverage to produce higher levels of net investment income, and one massive benefit of this is that their loans are floating with this inflation rate. And as inflation rises and interest rates rises, ORCC's entire income basically just goes up with it, which is really important because I was saying before, the U.S. inflation rate has been at around 4.16% compared to even last year during COVID and things like that. Inflation rate was still only around 1.3%. Now going to ORCC's ex-dividend date, this is kind of important because as we will cover in a video that's going to be posted later this week, you have to buy the stock before the ex-dividend date, not on the date, but before, to get this earnings day on this day. And as I was saying before, around the 8.5% dividend. And I really do think that ORCC is a good investment, especially for a dividend, anytime between now, which is June 7th, to June 29th. And as long as you can catch them on a decent red day, or if you see them pulling back before this ex-dividend date, I would really like to see this dividend do well. Now, the reason being is because of the fact that ORCC not only is just a dividend with an 8.6% increase, but as the actual stock has an upside of 1.57% at roughly 14.9. Again, this is only according to tip ranks, and I don't want to only just take one opinion, so I also went to go look at market beat. When you look at market beat, yes, they have that 1.16% downside, but I'm not too worried about this downside just because the fact that its consensus price target is still relatively high off of 8 different analysts. So I think with the fact that even though it does have that 1% downside, with a few different things, with what we'll be going over later in the video, ORCC should still be valued at around 14.6 and around $15. Now, first thing that I'm going to cover is ORCC's price to book ratio. We covered this in one of our basic metrics video, and as you can see here, ORCC has a price to book ratio of 0.98. Super important because as we were talking about before in those videos, is that any price to book value that's under 1 is extremely good, and really anything under 3 can be used for value investors. So just seeing that the overall stock with the price to book ratio of under 1 is super important here. Now, I didn't only want to use one single metric, but multiple that we've learned in the past videos. Another one was the PDE ratio. And you can kind of, as I was saying before in those videos, is that you can use the PDE ratio, but it's not really specific to a single stock or the overall market. You have to use this PDE ratio and compare it to all the same overall stocks in that same industry. So as we can see here, ORCC Capital industry is financial services. And as you can see back over here, ORCC has a PDE ratio of 10.3. And this is extremely good because when you look at the overall financial services PDE ratio, it's actually 14.26. So roughly speaking, ORCC has around a 50% lower PDE ratio than the overall financial services industry, which is extremely good. Now, the last ratio we're going to really cover, and just what we're covering today is just, again, even though we use the tip ranks and market beat, I did want to bring at least another opinion into it. And as we can see here, analyst ratings put an average of a buy of ORCC as of June 7th. And again, this is another 10 ratings that can be extremely good. And the last ratio I wanted to cover is what PEGI is. We didn't really cover this in the other videos because this is only really specific to dividend stocks. But PEGI is basically the price to earnings ratio and the dividend yield. And as you can see down here, the PEGI ratio of below 1 can represent a potential investment opportunity, as it indicates the stock is high dividend yields or potential growth and is currently selling at a bargain price. And if you go to Y charts, which I use a lot as well, you can see right here that ORCC has a PEGI ratio of 0.011, which is crazy to think about because it really said that back here in this other tab that anything below 1 can represent a really good investment opportunity. So these were just a few metrics that I went off of, as well as a really high dividend that I believe that Owl Rock Capital Corporation can do extremely well with this dividend as well as over this few months. And that's basically all I have today. Hope you guys have any comments or concerns, and you can put them down below. But hope you guys have a great rest of your day. Bye.